Is oil just about to have a major breakout? That's up for debate, but I did go long recently with members of Smart Money Commodities and Miners, and I want to show you why. In addition to analyzing the chart of oil, we're going to take a look at the chart of natural gas, diving into the key levels to watch after it had a mega move following its breakout. Could natural gas be leading oil? Let's dive right in. My name, folks, is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com, and we're going to get into the charts. Let's go. Here's your chart of crude oil. Now, the first thing is we're looking at the daily chart, right, with using candlesticks. And the first thing that pops out to me is this pattern. And I've talked about this pattern before. This is a classic cup and handle. You can see here's your cup, here's your handle pattern. Now, the first thing I'm watching here is what we would call the parameters of the handle. What we do is we take a trend line, we connect it through the recent lows. Notice how it basically perfectly aligns with the lows. So the highs are connected through here and the lows are connected there. Now, what this does is it gives us a firm basis for understanding when it breaks out. The breakout would be a move above the upper trend line here of the parallel, or essentially the handle of the cup and handle pattern. All right, here's your cup, here's your handle. Now, the nice thing here is the cup and handle pattern would fail. And we always want to know where patterns fail because nothing's 100%. Any close below this level, basically below 56, that would negate the cup and handle. You really don't see cups where the handle goes below the low of the cup, right? I mean, a cup is very simple, right? It's this type of pattern, like there. There's your cup and handle, right? You don't see cups like this, right? Like that. That just doesn't happen in the real world. And I always translate that into the charts, right? The charts are very similar to what we see in real life. So, what we're watching here is, and I did go long right over here with members on crude oil. The idea is my risk is only about 2% until the pattern would fail. And the reward is a breakout of here sends this all the way up to likely a target of around $66 a barrel, right? So we're talking about 10 plus percent of upside reward for a risk down here of simply about 2%, right? So again, when I went long, it was around 57.60 or so. Downside risk is a buck 60. Upside reward is from about $58 all the way to 66. That's about an $8 potential reward for $1.60 of risk to the downside. All right. And again, what you're seeing me do here is exactly what I do in real life of trading, right? It's understanding the chart setup, the factors, the cup and handle, where it breaks out, the setup, but also understanding the place where it would fail. And therefore I can calculate my risk versus reward. And so again, I always say this, but I'll say it again in this video because we obviously have new people watching every day, is that I could have a great setup on the chart. Let's say 90% success rate, which is virtually unheard of in technical analysis. But if I'm only going to make 10 cents on that 90% success rate trade, but I could lose $10, would you still take that trade? And the answer is probably not. It's not worth it. Even though it's only a 10% risk of it failing and the pattern failing and going against you, the loss can be so big that it's not worth the small gain. And that's what we have to kind of generally understand and get our minds around, is that it's not as simple as, oh, this is a great trade setup. Oh, I think it's going to work out. Look at the downside. The downside, looking at the downside, the risk is actually more important than the reward because you got to protect your capital, right? Protecting capital means you have capital to deploy and ultimately grow. If you lose all your capital, it's really hard to get it back when you got nothing left. I think we've all experienced that. I certainly know that early in my career, I had many accounts that I blew up trying to understand and learn how to trade. All right. Now, so the short term is we're looking for a breakout here, basically above $60. If we get that, we should get a bigger move. Now, I am looking at some other factors here. So we're going to remove these lines and we're going to go to our bigger chart setup. Now, one of the things I'm following here is this down sloping trend line right here. Now, again, this would kind of be my max upside. So we talked about how if the cup and handle breaks, we have upside to about $66 a barrel. I could sell half there right here around 66 and then I'd ride the remainder to this trend line here, which again is a longer term trend line of resistance. I might even consider shorting oil if it rallied all the way up into that level. Now, another thing that's kind of catching my eye here, folks, is that if we zoom out on this chart, so number one, we have this longer term trend line here. But if we look at this, you could actually make a case that we have this bigger parallel formation, right? If we take this trend line and we connect it to the two major highs since basically since the 2008 bull high to the 2022 high, and we drag it down, what we see is you have this level up here. Now, you notice how we started out very small, right? So we started out, okay, well, we're playing the short-term move here. So there's time frames. So as a technician, I need to look at the short term where I'm just looking at the last couple months of data on the daily chart. And then I have to zoom out a little bit further till I'm looking at the last couple years, then the last decade or 2 decades going back to the '08 highs there. And what this shows me is that oil, in fact, is trading in a downsloping parallel, right? If we flip back to this chart, I mean, look at this. This is amazing. Here was your COVID panic, so you pierced it, but look at how quickly it recovered back above. You hit it in 2016, and it was the low in the '09 after the '09 collapse. Obviously, this was when we had the financial crisis and everything was crumbling. But there's no doubt. I mean, there's symmetry to this chart in that we have this high here in 2008, this high in 2022, and then these lows 2009, 2015 to 16, and then the COVID 2020 lows right there. Now, what does this mean? Well, if I'm looking at the biggest upside, let's just say all of a sudden either a war breaks out or the economy, the global economy due to AI, due to data center demand, I mean, whatever it may be, let's just say all of a sudden the demand for oil goes through the roof. What's my worst or biggest upside move? And that's what this parallel gives us. It would tell us that our upside level here would be up here to about 120 to 124. All right, obviously it's downsloping, descending, so it'll adjust over time. But on the other side of the coin, let's just say we have our next COVID collapse. Now, I'm not saying it's going to be another virus, right? But let's just say it's a financial crisis like '08, '09, or the bear market of 2016, or the COVID collapse. What's my worst case? Down to about $10 to $13 per barrel. Now, people will say, oh, that's crazy. It's never going to happen. Other people will say, oh, we'll never get back to 124, right? But the key is that I'm not here telling you where it's going. I'm telling you the levels that if it gets there, where is it going to have support, where I can buy it and say, all right, this is going to be a home run because past situations have proven this, all right, or at least there's a very high likelihood of it being a home run. And also on the other side is, let's just say oil rips higher. Where do I look to short it? Where is a high probability short opportunity? And this is what a good technician does, right? So you see what I'm forming here. I'm forming my short-term trade setup, which is I'm long oil here with the cup and handle in the near term. I have my upside to 66, maybe 70. But then if all craziness breaks out either in the bullish direction on oil or the bearish, what are my extremes? Where would we say, okay, this is a cycle low? Okay, we know $10 to $13. What about a cycle high? Let's just say we go nuts on oil. Well, 120 to 124. See how I'm formulating a scenario where I will be ready for anything that comes my way? And remember, folks, the more prepared we are, the less emotion we rely on, right? It's when we're not prepared and all of a sudden something crazy happens that we react emotionally. We panic or we FOMO. We get so much greed that we pay up ridiculous amounts. And so when you start to look at the charts on multiple time frames, zooming in, zooming out, you ultimately understand what's the possibility of something happening, and it keeps you safer and ready no matter what, and using logic and probability to make decisions versus obviously emotion. Very, very important lesson. All right, flipping over to natural gas. Here was that great breakout on nat gas recently. It had this kind of move up. It's chopped around. It's beginning to push up. This is my level right here. I do not have a position in natural gas just yet, but I am looking to short natural gas if we get to about $5.30, we can very clearly see. I mean, look at the beauty of this trend line here, right? So if we extend this out right to here, you can even see, right? So we ultimately have a high pivot, then it broke out, and you can even see right here, it kind of came back in. I know it's hard to see, but then support, 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 and then it broke down. So what does it tell us when we get back to this line? What's going to be? It was resistance, then support once, twice, three times, four times, broke. So what should happen here? If we go in this area here, we get this move up, right? We get this move up. It should get rejected. This becomes a swing trade short on natural gas, all right? At least a high probability setup. And so I'm not going to go to the whole zoom in, zoom out on natural gas. I'll save that for another video. I'm very cognizant of your time, folks, and I don't want to make these videos too long because I know you guys are, you have other stuff to do. Listen, there's a lot of important things. You have family, you have friends, you have jobs, etc. But I will do that in a future video. Isn't it fascinating, though? I love this stuff. Don't forget, courses on sale through Sunday night on Verified Investing, 50% off. Incredible deal. We're here for you. All charts, no BS. That's what it's all about here at Verified Investing. Talk to you soon, guys. Have a good one. Take care.